So thank you guys for tuning in to Ask Jeremy. I'm Jeremy, of course, and today with me is lender extraordinaire Jason Burns from Palmetto Mortgage. Jason, thank you so much for coming on the show here.
Hey, thanks for having me. It's definitely a unique time in the market and love to get some content out there. So thanks for having me.
Well, thanks for coming. So first question is, as we all saw last week, the Federal Reserve announced a 75-point BP hike, which is the highest hike that we have seen since 1994. It's pretty historic. For a lot of people that are interested in buyers, that might be scaring them away from the market. What sort of advice would you give to them in this moment?
First of all, we're still below the historic average, over the last 50 years of where interest rates have been.
Mhm.
The Fed currently, of course, is trying to combat inflation. A lot of economists don't agree with how fast and how far they are moving these. The truth of it is that it was needed, and rates in the threes and fours does not create a healthy environment long term. But a lot of people are used to that because when the market crashed in '08, due to over inventory or an excess of inventory, rates were in the threes, they crept in the fours. Even in 2018 and 19, we saw them sometimes in the low fives or the high fours. But then, of course, the pandemic happened, which then shifted rates way down below three, even, on 30 years at points. And so the reality of it is people have this idea that rates are supposed to be in the threes and the fours, and really that's not the norm. The norm really is going to be in the fives and the sixes, and over history, if you look, that's a healthy economy, a healthy environment. I think people we're trying to get used to those rates, but at the same time, one of the things I've been telling people, and it's it's a good little catchphrase, is you're marrying the house, you're dating the rate. So pick a house that you really love. You're going to be in that house for more than a couple of years, hopefully. We when we sell people a house, or when you sell people a house, or when we loan, we think, we quote them a rate hoping that they're going to stay in the house 5-7 years, I think is the average. Who knows if that happens, but back to the point that even though rates right now crept into the sixes, a lot of those rates you're going to see in the low sixes, mid sixes right now. We don't know what's coming, but what you got to do now is, if it's the time to buy a house, it's the time to buy a house. I say it's always a good time to buy a house. You should really not buy a house on the fact that I'm buying the house on this rate or that rate. You really are buying the house on the need to buy a house. Hey, 6%, 7% is still way better than paying a landlord 100% in interest. And that's what I look at, as trying to tell people, look, this is an ideology that homeownership is a goal, that the sooner that you can do it, the sooner you build that nest egg, the sooner you start that equity trail, and you can really use that as a stepping stone to really develop your portfolio financially, and even if it's just you want to just be own one home, just become a homeowner. The sooner you do, the quicker you're building equity, quicker you're building that nest egg for your family. So
Yeah, absolutely. And one way to look at it, just based on what you're saying, is, people say that when you're paying interest, you're essentially throwing money down the hole. Would you rather throw away 6-7% of your money, or 100% of it by renting? You know what I mean?
exactly. No, and that's what it is. It's not, you're paying yourself. I understand the paper trail of it is, yes, you're taking money from your bank account, you're paying a lender for that home. Not that you're getting back dollar for dollar immediately, with the amortization schedule, but you're really starting a savings account. And you're more the professional in this area, but South Carolina, number one, and two, just property overall, the appreciation. If you're even, say that you don't make any equity out of the home, which you would the first year, you're still going to make some equity, but say with no equity, just that appreciation value over that first year is really a great investment. Let's take a low end. I think nationwide, it was somewhere, single family homes were around 17% in appreciation last year. Let's cut that in half, or cut that down to a quarter, say 4 or 5%. Even that investment, especially, where economists think the economy is going, that's a great investment for your money. Just even look at it as something, instead of even stocks or something. A lot of hedge funds are looking at that now because they see the return on investment is, double digit figures year after year.
Yeah. Yeah. You are not speculating in any real significant trading sense when it comes to houses. If you're in it for the long term, I've told my audience this, as long as since the 1990s, we have not been outbuilding our need for new houses. And that speaks huge to the price appreciation for houses has always been good, but especially since we haven't been outbuilding our need for new homes, is in particular raised. And that is, we're getting a little better at that, but we're still not where we need to be. And I don't expect that we really will be at any point soon. So house appreciation is going to continue to go up. Maybe not in the next year or two, but over a long period of time, it certainly will. Now, for that home buyer, maybe a first-time home buyer who is they're afraid of the interest rates, or maybe they just feel like they just got priced out of the house that they really wanted to get because interest rate changes. What would you say to them? How would you still encourage them in this market?
Like I said, I mean, if you're first time buyer, it's nothing to be scared of. There's programs out there, if you have a certain credit score, it's as low as 3% down. On the flip side of that, it's becoming more of more of an opportune time to look at down payment assistance programs. You're still seeing a lot of offers on houses. I do feel like there is a shift happening, and I think that you would agree with that the scale's evening a little bit. You and I both know last year we had a hard time getting any FHA, VA, or USDA offers accepted because you're getting 15 offers on some houses. Now you're seeing that shift. I'm seeing people having open houses. I'm seeing houses stay on the market a little bit longer. Not that there's a bubble, because there's just not enough inventory out there, but you're seeing more FHA offers get accepted, more USDA offers get accepted, more state housing offers get accepted. And so to me, this is an opportune time. If you were one of those people that got frustrated from having those offers out there as a first time buyer and went and extended your rent for another year or 6 months, this is the summer of opportunity that to me is the time to move. I mean, you've got a time where, yes, interest rates are going up a little bit, but to me, like I said, it's still below average. It's still a great time to get in. And when we're talking about rates being in the 5s and 6s, go out there and get a credit card, buy a car, look at the rates on those. I mean, to me, housing is still one of the most affordable investments out there. So people go home and they listen to this newscaster that is not a trusted advisor in real estate or in the lending, category. And so, this guy gets a news story on his desk and he says, oh, the Fed is hiking interest rates. Now is not a good time to buy. I don't know if that's the best advice to listen to. I mean, it's the same thing. People go to church, they go out to eat, they go to school, they hang out with friends. Those friends want to be those trusted advisors, but are they? I mean, do they really know what's best for you when it comes down to the decision making for you and your family? I mean, to me, I would rather talk to somebody that's been a banker for 15 years or been a real estate agent for 10 years instead of listening to Joe at school that, he may be a teacher, but his background might be in social studies, or, he may be a investor, but, he may be in just in the bond category. It might not be somebody that's specified in real estate that's giving you that advice. So that's one of the things I would take away from this is, yes, it still is a good time to buy. Don't be scared. The sky is not falling, just because rates have ticked up a little bit. To me, it's showing a little bit healthier of an environment, and for that long-term investment. And Jeremy, me and you, we can agree on this, I think, as well, is that, when in times of people being worried about if there is a recession coming, where do people go? They invest in long-term investments, 10-year bonds, invest in mortgages. They invest in something that's safe and secure and long-term. And if you take out the anomaly of the crash of '08, okay, and you look at the last 7 recessions before that, home sales went up, home values went up, and interest rates stayed about the same. So I mean, this to me is a good time, as one of the probably most opportune times before interest rates can go up more, because you were talking about at the beginning of this conversation about the Feds coming out and saying, hey, this is our biggest rate hike. Now that would have been great if they came out and said, this is our biggest rate hike, and we feel like this is the last rate hike we're going to do. Because if they say that, it turns the nose in a different direction, and that people start having that confidence that, hey, this is the peak of it. Okay. So there's more movement starts to come back. But with the Fed saying, we think we're still going to have to make more rate increases, that to me, one, I think is a bad way to get information out there, one. But also, then it makes me and you think, okay, are they going to continue to raise rates? Or to me, what we always used to do in science is, we'd make a hypothesis and sort of put out an experiment and see what happens, and not do this knee-jerk reaction every few weeks or every month. Yeah. So although the media continues to pick this up and pushes this agenda of that, it's not a good time to buy, listen to the experts out there. Look at content online that people, have 15, 20, 30 years in the market. Look at what they're doing. They're not stopping buying property right now. They think it's a great time to invest in it. And so for that first time buyer, it is a little bit harder to cross that bridge or swallow that pill. The interest rates went up a little bit, but tell them to contact me. I can break it down what the difference is in a half a point on a $200,000 house. And if we can justify it and say, hey, we think that a recession is coming in somewhere 2 to 3 years, and then in that point is where you refinance. You try to also maybe get rid of private mortgage insurance, which is another topic we could talk about. But always look at what's right for the person at that time. And really, to me, home ownership at any time is a good move for somebody, because in the long run, you're saving money, you're building equity.
Yeah, absolutely. Absolutely. I think one of the things I've told my audience is, I'm an investor myself. I'm going shopping right now because I frankly do not care about house prices. I care about cash flow. If I'm thinking of this from a wealth building and investment standpoint, which I do as a real estate investor, I want to know what's the money I'm putting in versus the money that I'm getting out. And as long as that's positive, as long as I'm making money on it, I really don't care what the interest rate is. I don't care about any of that sort of stuff. I know long-term it's going to build equity, but I don't care how long that takes, because I'm making money off of it as an investor because it's cash flowing for me. And that is just a matter of knowing the right type of property to look for. That's price undervalues what it's really worth. You might have to put a little bit of aesthetic work into it, the paint and some basic inexpensive stuff, nothing crazy like roof foundation or anything like that. But some stuff that just might need to be spruced up and look a little better, and all of a sudden you have a cash flowing property. Was there anything else that you wanted to touch on today?
I mean, one of the things, like, we're talking about the trusted advisors is, hey, your audience, definitely reach out to me if you've got questions in the lending category. I've got 15 years experience. We do everything USDA, FHA, VA, conventional. We do investments, we do condos, we do construction to perm now, actually, which is a great product. And that does qualify VA and FHA. And, if they're looking for property or investments, reach out to you. I trust you with anything, real estate wise. I always reach out to you for answers. So, I would say that's the moral of the story here is, one, trust the people that have been in the business and know the business. And then two, don't look two feet in front of you. Look 2 miles down the road at the long-term effect of buying a house, not the short-term, like we said at the beginning, marry the house, date the rate.
All right. And Jason, in case somebody does want to reach out to you, whether they're a realtor who needs a good lender on their side, or they're a first-time home buyer or an investor, how can they contact you?
My cell phone number, which I'm available nights and weekends, know how the market works, so try to be available for my clients. It's 803-210-7999. My email is jburns@palmettomtg.com, and that's jburns@palmettomtg.com. Jeremy, I really appreciate you having me on today. Thank you so much. If there's any other questions or anything else you need, please let me know.
No, thank you so much for joining us, Jeremy. And thank you guys for watching. Remember, if you do have real estate related questions, you have lending questions, I'm going to throw up his business card on the screen so you can see all that information that he just said. And remember, if you have real estate related questions, just ask Jeremy by going to askjeremysc.com. Thanks, guys.